Hello. Welcome to February live Q&A. I'm trying to make sure my speaker is February, correct? Live Q&A. All right. We are live on YouTube, and let me do all the things. Oh, I can't disable the waiting room. Okay. One more thing of housekeeping before we get started. I want to make sure I'm recording. There we go. We are now recording. Welcome, everyone. Let me chat and resituate my microphone so I can see everything. It is not detecting the microphone I want it to detect. You guys hear me okay? Yes, okay. Well, maybe I will just deal with not having this microphone. The correct microphone, but oh well. As long as y'all can hear me, that is what matters. Okay, welcome to February live Q&A. We are broadcasting this on YouTube, so I have pinned my video, but if you don't want your video on YouTube, you can turn it off. Hopefully it won't detect your video anyways if you're not talking. But I just wanted to be transparent about that. And yeah, so this live Q&A is for all of my community. If you're on YouTube, I guess I should pull that window up so that I can answer questions over there. That's not the right window. Ooh. Okay. I don't know where it's at. It disappeared on me. It's like I don't know technology. Okay. So yeah, you can submit questions in the chat and I will answer them. I also have some pre-submitted questions that I'm gonna tackle first from the group. And we'll go from there. All right, I'm gonna pull up my questions. Yesenia, hello. You submitted a question. It says, I have a client that uses owner's draw to pay herself, and I know that is an equity account. Can you explain to me how that works? Like when she goes to do her taxes, how does that reflect on Schedule C? So if she's a Schedule C, that means you're basically a disregarded entity. So the business and the person are one, and that's why it's owner's draw. All the income from the business flows through to the owner, whether or not you withdraw the money. So not paying yourself is not going to get you out of paying taxes, basically. So the owner's draw doesn't actually show up as an expense account because of this. And so it doesn't show up on the Schedule C at all. I hope that kind of explains it. So you should not be coding owner's draw to wages or salary unless they are an S corporation. In that case, they wouldn't be on a Schedule C. So owner's draws are kind of just ignored on Schedule Cs, basically. And they get taxed on all of the income from the business, whether or not they take the income out or the cash. So let me know if you need more clarity on that. All right. And then next question was, in QBO, I have a client that I have the checking account and her credit card downloading from the banks. The amounts in QBO doesn't match the checking and credit card balance. I have a client that I have the checking account and her credit card downloading from banks. Okay, but the amount in QBO doesn't match the checking and credit card balance. So at month end, when you get the actual bank statements, you're doing the reconciliation function, right? And that is what is going to show you where the differences are. So if your bank statement balance is, say, $10,000, but the amount in QBO is, I don't know, $11,000. The $1,000 difference should show up on your bank reconciliation report as uncleared transactions, whether it's an uncleared deposit or an uncleared check. And those are the transactions that you need to go and research, like, why is it different? Why is it still here? Did the bank feed break? And we didn't get some of those transactions through the bank feed. And so you'll want to tick and tie each transaction that comes through on that reconciliation screen with what's on the actual bank statement. And so if it's your beginning balances that are different, then you need to go back prior months and figure out where that difference happened. Does that make sense? Okay. Always look at that report at the end of every month, because that's going to show you if you're missing transactions or if you've duplicated transactions. And then if that's the case, then things are incorrect. Okay, Madison, you submitted a question. I don't know if you're on here or not, but I'm gonna go ahead and answer it anyway. When it comes to billing for your services, do you set your clients up to be automatically billed, or are you sending them an invoice every month? I set them up to be automatically invoiced every month. And that's part of why I do a flat fee, so that I don't have to worry about invoicing my clients each month. As soon as they're onboarded, we set them up with a recurring invoice at Xero, which you can also do if you're using QBO. And we set up invoice reminders. We offer auto pay. About 75% of our clients actually set up auto pay. So no one has to worry about it. And then the other ones get invoice reminders for if they've, passed the due date of their invoice. And so Xero does all the heavy lifting on AR for us. That is one of the biggest benefits of doing a flat fee billing structure. So you don't have to worry about doing that each month. And then the second part of your question, the CPA firm that I work at currently automatically bills each of the clients every month, and they have been a handful of people call and basically complain. But when they were not on the automatic payment service, they were not paying for months and months, and we were just doing work for free, basically. Yeah, so it sounds like they're not only automatically billing, but they're automatically withdrawing the money. And that's where in QBO, I think people can opt into automatic withdrawals. I'm not sure if that's the case yet. The way it's set up in Xero is you can't opt your client into an automatic ACH yourself. They have to do it from their end. It's just a checkbox. In QBO, a lot of people will hold on to an auto ACH authorization form and set it up on behalf of the client. And so that might be what that CPA firm is doing. But if you do it that way, it's part of the contract when they first sign on, and they would know that they're filling out an automatic ACH form. So I prefer to let the client opt in or out of that themselves instead of, and it's not even possible to do it the other way in Xero. But yeah, so if it's in your engagement letter, you're very upfront about it when you sign on a client and let them know, like, I require automatic payment on the first of every month. I not only have it in your engagement letter, if that's the way you intend to do it, but I would also talk about it on your discovery calls so that it's not a surprise for anybody. Most clients who value our service are willing to pay for it and won't complain. So I wouldn't be too worried about that in the future for yourself. All right. Let's see. Let me go into the chat and then I'll come back to the pre-submitted questions. Giselle says, what software do you use to securely store client documents? We use Google Drive, and we use the business version of Google Drive. It has SOC 1 and SOC 2 level reporting audit requirements or whatever. I don't know how to formulate that in my brain right now or articulate that. But yes, we use the business version of Google Drive, and that's how we actually share documents with our clients too. We rarely ever attach a document to an email. We send them the link to their private Google Drive that is only shared with them. So it's not a public link. Everything is secure that way. Hopefully that helps answer that question. Kim says, hi, Serena, could you share some speaking topics for various events like Chamber of Commerce and other meetings? Yeah, I'm actually going to be doing some a speaking and educational event for our local young professionals group this year, probably in Q2. And the topics that I submitted, we're trying to, it depends on who your audience is, really, what you want to talk about. So for this event, um, I I already know that the intended audience of this event are newer business owners, people who are just getting started or wanting to start a business, or kind of early on in their business journey. And so we're going to be talking more basic level finance type business setup stuff. So the topics that I'm going to be talking about are, I have a talk that's about three tools for starting your business or setting up the finance side of your business. And I talk about banking, and I talk about Relay for that. And I talk about accounting software, which I talk about Xero. So you could fill in the blank for whatever like your go-to software or platform is for these things. And then basic, like what to keep and how to track things. And so then I talk about HubDoc. So I talk about the three softwares and, you know, what role they play in setting up your business. So banking, accounting software, and document management. So you could fill in those topics with whatever software or process that you use with your clients. So if it's QBO and QBO receipt management or Google Drive or whatever. And if you have like a local banking partner, you could talk about the banks that you really like that work well with QBO or whatever software that you use. So that's for like a beginner speaking opportunity, or like the audience are kind of beginning in business. If you are going to be talking to more seasoned entrepreneurs, you would want to talk about deeper level topics like cash flow management or I don't know, stuff like that. That's basically what I do too. So if I'm talking to higher level business owners, I talk about KPIs that they would want to track and how to manage their cash flow and things like that. So hopefully that helps. And keep me posted on your speaking gigs if you have any. Madison says, when starting fresh in a new QBO, should the opening balance equity account always have a journal entry created to offset it to retained earnings or equity? That's kind of a preference, honestly. I prefer not to have opening balance equity, and have, you know, moved it to usually owner's equity is where it should belong. Because usually opening balance equity is the effect of setting up your QBO and setting up an opening balance in your bank account, which if you think about it, when you open a business and you have your bank account that you put money into for your business, that money usually comes from where? The owner. So typically that amount should actually be sitting in owner's equity or owner's investment. Depending on where those entries came from. I would do the due diligence and the research to figure out where that opening balance equity adjustment came from, and then decide where it should be. Typically, it would be owner's investment. Yesenia says, do they have to add the owner's draw to the taxes additional to the income of the P&L? No. The reason why I ask is because I use the P&L to do the taxes on the Schedule C, and the income expense is way less than what is being withdrawn. That means that they're withdrawing more cash than they're actually generating, which means they might have a credit card balance. They might have injected cash from another loan or a family member gifting them money to keep their business open. But if their net income on their Schedule C is way less than what they've taken out in cash, then you need to figure out where else that cash came from. It's probably a loan or credit cards. But still, it doesn't mean that they profited. The profit in your business can absolutely be different than what you're taking out, or it could be prior year profit that they have stockpiled as cash, and equity in the business that they're now withdrawing, but that does not affect their taxes. Their tax is only based on the income that they generated in that year, the net income. Giselle says, I do automatic ACH for my clients and no one has complained. Yeah, a lot of people don't, as long as you're upfront about that. And they would know because they would be filling out a form authorizing that. What's the best practice for bookkeeping for a nursing care home? Oh, that's a loaded question. Um, I mean, that's a very general question also. You might need to be a little more specific on that. And if you're looking for resources on best practices for certain industries, Google is your best friend. Or, posting in the group to see if anyone else has experience. But you might need to be more specific on your question there, because best practices for bookkeeping, for a nursing care home, it could mean a lot of different things. Holly says, I have two potential medium-large clients that want to reach out to me, one of which is a coworker of my husband and the other is a new buyer of a company I've previously worked for. Would you suggest I get their information and reach out to them instead? I don't want to be pushy and want to be respectful of the process. Yeah, so that they want to reach out to you. I guess I'm kind of unclear on your question. If they are wanting to reach out to you, then I would not worry about feeling pushy and reaching out to them. It's totally fine to follow up with people and be like, hey, I know we had this conversation, or my husband, you and my husband had this conversation about my bookkeeping services. I just wanted to reach out and let you know, like, I'm here if you have any questions, if you want to set up a time to chat, or if you want to go grab coffee and you can tell me about your business, like it can be really chill like that. Just you go into those conversations, just willing to like help and serve people and just see what happens. But don't worry about feeling pushy. You're really, a lot of people need follow-up. Like I'm one of them. Busy entrepreneurs need follow-up. I'm not going to remember to follow up with people that I had conversations with. And if someone wants my business, I do expect them to follow up with me. So hopefully that helps. When there's a discount and refund on sales tax when filing the year-end sales tax return, where do you post the refund to? Okay, so if there's a discount and a refund on sales tax, well, a discount would mean that maybe you filed on time or early. A lot of states give you discounts for filing early. That would go against your liability account, reducing the amount that you're paying. So I would adjust that to you might, if this is a common occurrence for this client, I would create a sales tax discount income account. So it would be in other income below the line because it's not your general business activity. So I would create an other income account, or if you already have other income, just book it there. And as far as refund on sales tax, same thing. However, you also want to make sure that if that's happening, clients are getting refunds on sales tax, I would book it to where the sales tax was booked originally. If that is to the liability account, then essentially you actually just want to put it in that income account. But the second step you want to do is to find out why they're getting a refund. And if you're over collecting, you want to make sure you're adjusting the collection methodology. So if things are being calculated incorrectly, make sure that gets corrected so that you don't continue to have these refunds going forward. Hope that makes sense. But yeah, long story short, other income in a roundabout way. Madison says, is it up to the bookkeeper to give advice on if a client workers should be employees or contractors? I've been asked this several times. This is a very common question to be asked as a bookkeeper, and it is very smart to be able to understand these rules. However, I always caveat these types of conversations with clients of these are the rules. It is really up to you to make a final decision because you're the business owner. I can't make that decision for you. I will give people kind of feedback on if it were my business, I would do it this way. But you do have to be careful not to be giving legal advice because some of this can fall into like a legal situation. So I would give the client all the information, give them the rules, the IRS guidelines, and walk them through like each question, because there's actual questions that the IRS has like to determine contractor versus employee. I would walk them through those questions together and say, okay, for this employee, like, do you have control over their work product and their, their process? Do you give them tools to use in the business, like a computer or a workspace or whatever? And then if the answer is yes to even one of them, I would say, ultimately, it's up to you. This could be an employee situation, but like, it's up to you whether you're willing to take that risk. Just know that if you do continue to pay them as a contractor and someone reports this, like for instance, this is what could happen. You have a contractor working for you, and maybe you part ways and they aren't able to get another freelance job or whatever for a while. So they want to file for unemployment. Well, they weren't an employee, so they weren't really eligible for unemployment, but that can open up a case with the Department of Labor of like, if they're like, well, I should have been an employee, then the Department of Labor could come back and say, yeah, this person should have been an employee. So now you owe back payroll taxes, and you now owe the employee portion of the withheld payroll taxes, or what should have been withheld. So there is a risk to that. And that's what I present to the client. And then I say, ultimately, it's your decision. It's up to you what risk you're willing to take. But if you are really unsure, I would recommend talking to a labor attorney. That is an attorney well-versed in labor law. So that's how I handle those things. In general, most of the clients that I work with want to do everything above board. So as soon as we start having those types of conversations, they're like, yep, we're going to make him an employee. I don't want that risk. And they've made that decision themselves, just, going through the facts and circumstances with me. Let's see, but is it up to the bookkeeper to give advice? Not really. I give them the information and let them make the ultimate decision. Can you share your elevator pitch when you meet new people and groups? Yeah, that's in my program. And I also help you develop your own. But mine is I like to be short and sweet. So when I meet new people and they ask what I do, and I say I'm an accountant for online course creators and online businesses. So if they ask I like to leave a little bit of curiosity. And so they might say, well, what constitutes an online business, or what's a course creator? And then we go into the conversation of what the actual industry is. So I say online business because it encompasses a lot. So it encompasses consultants, coaches, course creators, and e-commerce. So that's usually where the conversation goes. It's interesting networking locally, because most of the people I network with locally are not my ideal client, but you never know who knows somebody, or someone who is like, oh yeah, I do, like, I'm trying to start like an e-commerce business or whatever. So it's interesting. Made an overpayment. Amy, did they over collect or just pay too much that they didn't actually collect? And then Yesenia, follow-up question. So then the owner's draw is included in the gross income on the P&L before the expenses, right? Essentially, not really, kind of. So the owner's draw, like, you have to look at that as a separate thing. That's just a cash movement. It's not on the P&L at all. So if the client makes $100,000 in revenue and they spend $60,000 in operating expenses for like rent and product and all whatever they spend on their operating expenses, but then they pay themselves $50,000 when they actually net income was only $40,000, then like that doesn't show up on the P&L at all. Like the net income of the $40,000 is what you put on the tax return. That's what should be left over on the Schedule C. There's going to be little differences because of meals and such and non-deductible items. But if everything were like perfect, $40,000 would be the net income. If they paid themselves $50,000, the IRS doesn't care how much they paid themselves. The IRS cares how much net income the business generated that year. The client could have paid themselves $0 and they will still get taxed on the $40,000. If they paid themselves $100,000, they're still getting paid, they're still getting taxed on the $40,000. And the difference would be, that's where it's just kind of for your own information or to help the client understand, because a client might be like, well, how did I pay myself $100,000, but my net income was only $40,000? And then that's when you start asking questions. Did you take out a loan? Did someone lend you money? Did a family member gift you money? Did you open a credit card that you were buying all of your operating expenses on, which enabled you to then have the cash flow to pay yourself $100,000? Or are they not reporting some of their cash income? That could be a thing too. So yeah, doesn't really matter what they pay themselves on Schedule C. It's what is actually generated in the business. Kelvin says, I have a client that got refunded for fraudulent transactions on their credit card that occurred in prior years. I just posted those refunds to other income fraud, reimbursement income. Does that sound okay? Okay, so if they got refunded for transactions that hit their credit card in a prior year, so in the prior year, they actually claimed the expense, and then this year they're getting reimbursed. So yes, other income is accurate. Because they took an expense in a prior year and this year they need to basically claim that as income. iPhone 3. Hi, Serena. How to go about having current clients re-sign a revised engagement letter. After working a couple of years now, I want to add policies that I've run into. Yes, absolutely. Okay. So this is something everyone should be revisiting every couple of years, if not every year, re-looking at your engagement letter, adding things to deal with situations that you've come across. Like every year, my engagement letter gets more and more detailed because of this, because we have issues that pop up throughout the year of like, oh, that could have been solved if I had put that in the engagement letter. It would have been a lot easier to have that conversation with the client, yada, yada, yada. So what I do, depending on your system for engagement letters, I use Dubsado. And so when we onboard a client, we create a project in Dubsado and it has a proposal, an engagement letter, and that's the main contract in Dubsado, and then the invoice. If you already have, like you've already onboarded the client, you have that engagement letter in a system like Dubsado. If your system allows subcontracts, so that's how it pops up in Dubsado, we just add a subcontract with the amended engagement letter, and that way it's still attached to the same project in Dubsado. You can also emails with a client acknowledgement suffices as an engagement letter or an amendment to an engagement letter. So you can be as simple and straightforward as that and send out an engagement letter amendment to all of your clients via email and let them know, like, we've changed some policies in our engagement letter. This is what's changing. This is what changes for you. Please acknowledge and this email, and we'll just add it to your file. And you can just print that to PDF and save it. Like, you can make it that simple, or you can make it more complicated like I have and create a subcontract in Dubsado and have them digitally sign it. So that's how I handle it. Let's see. Hi, Apple. How are you? It's so nice to see you. Okay. Let's see. Make sure I'm not missing any questions. Okay. I have a client who's an S Corp, but and they're past due 941s on an IRS payment plan. You might need to retype that. Is there a certain way I need to book that in QBO? Okay, so they have past due 941s on an IRS payment plan. Technically, that should be already sitting in a liability account if they never paid it. So I would backtrack and figure out why that wasn't. Are they on QBO payroll or Intuit payroll? Because generally, if they are, those amounts should be sitting in payroll liabilities, or payroll tax payable, an account like that. If they're not already sitting in there, then you need to just straight up expense it to payroll tax. Let's see. As a follow-up to Caleb's question, can refunds be posted to where they were originally posted and not to other income? Yes, they can, but if you are dealing with different years, what's going to happen is you're going to see a credit amount in an expense account, which is ugly, for lack of a better word. Like, it's just not clean looking. And so it wouldn't really raise red flags, but like as a client, if I were the client looking at my financials, like I don't want credit amounts in my expense accounts. Like that should be moved to an income account, if that makes sense. But if it happened, if it occurred in the same year, absolutely, a refund should go to the same account that it came out of. Do you go over your engagement letter with clients? I have a hard time telling a client no to something that they thought I would handle. I didn't have it in the engagement letter, but we also didn't discuss it. They just didn't actually read or understand the engagement letter. Okay, so if you didn't have it in the engagement letter, then it doesn't really matter that they didn't actually read or understand the engagement letter because it was never in there. But in instances where it is in the engagement letter, that's why it's really important to have these things in the engagement letter, because then it makes the conversation easier. You can be like, hey, I don't know if you remember signing this, or how deeply you read the engagement letter initially, but I would like highlight or screenshot the section of the engagement letter that applies to whatever you're saying no to, and let them know like this is out of scope of our services. But we can handle this for our out of scope fee, which is blah, 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 which you should also have in your engagement letter. Like I always have an hourly fee designated in our engagement letter for out of scope services, which rarely happens, but it's nice to have that in there so that it's a lot easier when it's like, this is clearly out of scope per our engagement letter. That's $150 an hour or whatever you decide it to be. Would you like to move forward with that service? And then it's just like an email. As far as going over the engagement letter with clients, I try to tackle the main points of the engagement letter and how we work with people in the discovery call. I don't necessarily go through in the engagement letter word, paragraph by paragraph with them, but it's really smart to be able to cover what the engagement letter kind of encompasses when you're talking about how you help people and how you work with people and what next steps are. So whatever the main things, like the problem areas that you have, make sure you're talking about those on your discovery call before you even onboard a client. You can also talk about it during onboarding, I guess. Again, if you already talked about it, you can never over communicate like the scope of your services with clients. But yeah, it is tricky to have those difficult conversations with clients. Like, actually, this is not in our engagement letter. So yeah, if they thought you would handle it and you didn't really talk about it, unfortunately, you just have to have the difficult conversation with the client, and you can just be straightforward and be like, sorry, this wasn't in our engagement letter. This isn't actually something that we typically handle for clients. But like, depending on how important that client relationship is to you, it would be good to like have a solution for them. Like, I don't do this, but I have a contact that I can link you up with, or whatever it may be. But yeah, that's part of being in business, is having like hard conversations with people, unfortunately. Basically, they couldn't make the payroll taxes when they were due and a balance grew. Now they're trying to pay them and it's on a payment plan. Yeah, so it should be on the balance sheet then if they never paid them. And that's where you're going to record those payments against. So it'll be a debit to that liability, credit to cash, basically. And they probably have interest and penalties now as well. So those go to a separate expense account, and technically interest is deductible. Penalties are not. So when clients do have penalties and interest, you need to split the payment into all those categories so that you can see what's deductible and what's not. So basically, they withheld payroll taxes from their employees and did not remit it, which is theft. Okay. I'm going to go, looks like I've tackled all the questions in the chat so far. So I'm going to pop back over to my, my other, questions and make sure I don't have any questions in the YouTube chat. Nope. I don't even think people are watching live on YouTube, but that's okay. But it's up there for the replay. Okay. Madison had a question. What do you do if a client is either not paying or not being responsive when it comes to needing to find out certain things regarding their books? Do you stop services for them and then re-engage once they have paid up and or start responding again? I have a handful of clients at the CPA firm that I currently work at that either don't pay us for months before they were automatically billed, and or they just completely go rogue and don't respond to my emails or calls and then suddenly reappear when they want their stuff. This has always been so frustrating for me because once they decide to finally pay us or call us back, and I had been told my boss to hold off on doing their stuff, I have to go all the way back to whenever I last left off and catch up. This is annoying too when some banks don't allow you to download after 90 days and you've passed that mark. It really just creates a big headache. So do you let them just come back, or how do you handle that? Okay. So I don't know how much authority you have at the CPA firm, but this is something that you could suggest they do. And once you start working on your own, this is absolutely a policy I would implement right away. And you will have the ability to find the clients that you like and that respect your work and your time. And hopefully this won't be an issue, but this is something that comes up for us occasionally too. And this is something that we actually added to our engagement letter this year as an amendment. So what we do now is if someone is unresponsive for 3 months, we have the right to disengage. And during those 3 months, while they're unresponsive, we can surcharge them. Especially if what we do is we surcharge if there's like a lot of commingled, like personal business transactions. So during those 3 months, if they're unresponsive, we're going to continue to remind them like, hey, after 3 months of no response, we are going to disengage with you. And if you come back, it's going to be a cleanup fee, which is going to be more expensive than your monthly fee. So you have to make it to where there's zero incentive for them for this type of behavior. If that CPA firm just allows them to come back and then now you're just doing you're basically doing catch up or cleanup work and it's a big headache, they should be charging a premium for that. So we want to incentivize the clients to keep on top of the records and the information that we need over the months so that it's like more affordable for them to pay us monthly than for them to wait till year end and get everything done. So that's how we handle it. We put in the engagement letter. We will disengage after 3 months if we don't get a response. And if you come back at the end of the 3 months and want all your stuff done, it's a cleanup fee, which is, you can say like it's a percentage in addition to your monthly fee or however you want to price that or handle it. So we typically don't have this issue with our clients. We've had more of an issue with the clients that tend to commingle. And then because there's so many questions we have, they put off answering them and then they end up in this situation. So there is actually someone that we have to, like, I've already disengaged with one client this year because of this. And there's another one that we're probably going to be disengaging from because of that. So hopefully that helps. Definitely add that to your engagement letter. I run payroll. We do it all in-house and it is very time consuming and gets hairy, and do sales tax right now as a bookkeeper at the CPA firm I'm employed at, but I don't feel that I have a solid enough understanding about how to actually handle it if I were to offer those services for my own business. Can I really just start a bookkeeping business and make it clear that I do not offer payroll and sales tax? Yes. Which that means you're going to be dealing with more like basic clients, like service-based clients, maybe with no employees, which means you're not going to be able to necessarily charge as much for bookkeeping services. If you want to charge a premium, you'll have to find other ways to charge that premium, like advisory and things like that. If you're working with solopreneurs with no employees and no sales tax, if that makes sense. So you have to evaluate like what types of industries you want to work in and the level of revenue that they're going to be at if they don't have these things, and price accordingly. So this is where it kind of comes into like identifying your perfect fit client. For you, it sounds like initially, I'm not saying this forever because you already have experience with sales tax and payroll, and you probably are not giving yourself enough credit. You probably could handle those for clients, but is it a matter of maybe you don't want to because you see how complex it can get? So in that case, your perfect fit client is going to be maybe a solopreneur or a service-based business, like a consultant who mostly just has contractors. You can have a business with employees still and just have them do their own payroll, like on Gusto. That's what we do. We set all of our clients up that have payroll. We set them up on Gusto and they run their own payroll. They approve their own time cards. They do all of that themselves. We just handle the setup and the integration and make sure that things are flowing through to the bookkeeping software as they should. So that's an option too, which I would highly recommend. And clients can and should absolutely be handling their own payroll, because especially if it's like approving hours and things like that. So we don't have visibility, like we're not seeing people clock in and out. So yeah, that's what I would suggest. It's like looking at industries that don't have sales tax, which there's plenty of them, lots of service-based businesses, or if they're local businesses, you're only dealing with one sales tax jurisdiction. And that's a lot easier than an e-commerce situation where you're dealing with maybe 10 to 20 jurisdictions. But you probably have the knowledge and the expertise. You're just not giving yourself enough credit, Madison. So, but yes, you can absolutely run a bookkeeping business without offering those services. Yay, I hit through all the pre-submitted questions. Let me go back to the chat. And go back up. Okay, Yesenia asked, as a company with payroll, what can be deducted on taxes? My suggestion is to go look at the small business publication and look at business deductions. And that's how you're going to learn what can be deducted and what cannot. In general, what cannot be deducted is things that are not ordinary and necessary. And then meals can only be deducted 50% now. Entertainment is non-deductible. Penalties are non-deductible. Everything else is pretty well deductible if it's ordinary and necessary. So that's kind of the rule of thumb there. How do you set goals for how many clients you obtain quarterly, yearly? How would you make a plan for growth? It's a loaded question. I don't know if you're in BBA, but I definitely cover this in the Bookkeeping Business Accelerator. But short answer is, you want to look at basically the take home pay that you want. And I do have a calculator for this also in the accelerator. You basically are going to back into your revenue based on how much money you want to bring home and accounting for your own self-employment taxes and things like that, benefits. If you're quitting a job and you're no longer going to have benefits, you want to calculate in the amount it's going to cost you to pay for your own. And you back into your revenue goal, and then you break that apart by like what you're charging, what your average, engagement fee is, and kind of the number of clients you need that way. So I have all of this inside of the Bookkeeping Business Accelerator. I have a spreadsheet with a template to help you design this with using flat fee pricing. And I help you develop what your flat fee pricing is going to be based on the services you're going to offer. There's a lot that goes into it, really. But yeah, that's how I develop my goals for how many clients we're going to obtain. And you also have to know your profit margins. So how much expense you have and what your target profit margin per client is going to be. Rule of thumb, especially if you have a team, if you're a solo bookkeeper and you don't plan on hiring a team, you get all the profits yourself. But if you have a team, you have to account for your payroll and everything. So rule of thumb for me, at least this is how I've priced and how my margins are in my firm. We have a 50% profit margin after I pay my team. So that means you have to price accordingly for that. My operating expenses, including my team, are about 30% of my revenue. 30 to 40% depends on the client. And this requires you actually tracking time across the team to be able to maintain a profitability analysis on each client. So you know which clients are draining you and which clients are profitable. And that's an exercise you have to continue to do to make sure you're pricing correctly. It took me years to nail that pricing and get to this point. But these are the numbers that I know are achievable. So 50% profit margin after I pay the team, which means 50% of the revenue could be owner's pay. I don't pay myself all of that. I keep some in the business for growth. So for instances where, if I have to hire somebody before we actually bring on more clients, then there's a cushion there. So that's how I figure out how many clients we're going to bring on, like how much net income I want. And we back into that based on that 50% profit margin. And then we figure out, okay, how many clients do we need at what price points to be able to get that? And then will we have the capacity? Because then you're starting capacity planning. So it's like, if the current team can't support that load, then I have to calculate in a hire. And this is CFO level work that we do with our clients, but I do it on myself too. I create a budget and create a plan for what all that would look like and go from there. Do you happen to share your updated engagement letter in the template vault? No, but I can add it to BBA. So if you're in BBA, I will add that. Let me make myself a note. Updated engagement letter. So in case you're wondering, inside of the Bookkeeping Business Accelerator, not only do I help you design your goals and pricing and all that we just talked about, I also provide you all the templates that you might need. So if I use it in my business and I know it works, it's in what we call the template vault. So we do have sample engagement letters in there, projects of like workflows and things like that we use in our firm. And so you get access to all of that when you join BBA. Yes, not doing payroll and sales tax. I've been running my bookkeeping firm without offering those. Yes, says Apple. Where's the best place to learn about sales tax? TaxJar has a lot of resources, so does Avalara. But the best place is really like just understanding what your clients are selling and where they're selling them and what the sales tax rules are around that. And you can find all that information on state websites. I do have a podcast episode, actually, I think it aired yesterday, that we talk about sales tax. I brought on somebody who runs a sales tax outsourcing company. So that's all they do is sales tax. So if you have clients that need sales tax done and you don't have the expertise or the time or the desire to offer it, you can outsource to them. They have different options of like white labeling their service or just working directly with the client. I would just hop on a call with them and talk to them to figure out what's best. But yeah, we go into that episode. We talk about sales tax, what to look out for, how to kind of learn it. And then I also have a sales tax workshop that is a great resource. It's on ambitiousbookkeeper.com/store. That's where all of my mini courses and workshops are, and you can jump into the sales tax workshop anytime on that. And that's a really great resource too. I'm gonna take a drink. This is a packed Q&A, you guys. These are good questions. Okay. When you've gained a client, but the client has a cleanup for the whole year that the other bookkeeper did not do, since they will be a client, do you give them a special price for the cleanup or charge them the cleanup? If it's a catch-up, I give them a special price. If it's a cleanup, I just charge them what a cleanup would be for anyone. And that's because cleanups can become very complicated and complex, and you don't really know that until you dive in. So you don't want to discount that service, really. You can offer them a payment plan. I've done that. I've even done a payment plan on catch-ups. So a catch-up is basically, for anyone who, I've had this question come up, so I'm just going to answer it. A catch-up is where nothing's been done, so there's not really a mess to clean up. It's just things haven't been done, so you're just catching up. A cleanup is where things have already been done, but it's all messed up. So you have to dig and reclassify and undo someone else's mess. And that's why I would not discount that service, because that's a lot of work in general. You don't know what you're really getting into until you get into it. A cleanup is a lot more straightforward. You're just recreating from scratch. And so that's the service where if they're going to become a monthly client, I will discount maybe 10 or 20% on the cleanup and show them that they're getting a discount by becoming an ongoing client. It's the same theory behind when I set up someone's books, like do a zero setup or whatever, like if you're doing QBO, a QBO setup. If someone is going to be doing their own books or have their own bookkeeper and they just need someone to set it up, I charge them. If they're going to be working with us going forward, I don't charge them for a migration or a setup, because I just include that, but I show them what it would cost. It would cost them about $600 to $1,000 for a setup. But if they're going to be an ongoing client for us, they get that for free. And so you want to present that as like a benefit. So short answer, no, don't discount a cleanup, but you can offer a payment plan. So what I've done is say the cleanup is, or the catch up, either one is a couple $1,000s or $5,000. I would let them know, like, if you don't want to pay this up front, we can add it to your monthly bill for the next 12 months. So you'll be paying this instead of your regular monthly fee. And the only risk to that is if they decide, or if they end up closing their business within the first year, most clients are going to be with you for at least a year. So I feel like a 12-month payment plan is safe, but there are times I've had this happen. I had this happen recently. One of the clients we had to disengage with because she wasn't like keeping up on her end of the bargain. I had built in the monthly there was like a 12-month catch up that we did. So we spread the amount across the first 12 months of working with us. And we disengaged before the 12 months was over, but I let her know, like, you still haven't paid off this. It's going to be paid off in March. So I'm still going to be billing you, but you're not going to be getting any services from us, because that was from the catch up that we did, the prior work. So that's a risk, but you don't have to do a full 12-month payment plan. You could do 6 months or whatever. If they've done nothing, it's not a cleanup, it's a catch up. So it would be a discount for the monthly price. Yeah, so typically the way I price catch ups is I look at what would we be charging them monthly going forward. Say that's $450. I do the cleanup for like half of that, or maybe 2/3 of that. So I discount the monthly like by 20 to 30%. It's whatever feels right for you. Because most of the value of what we provide is the reporting during each month. And if we're doing a catch up, they missed out on monthly reporting for 12 months or however much the catch up is. So that's why I discount that. What do you recommend, either a class or online, to go freshen up on your accounting skills? Kind of just depends on your learning style. And how much you want to pay for that education. There's accountingcoach.com, which is free. That's a really good place to go to refresh your accounting skills. Community colleges are always a good option too. They have, community pricing usually for community members. If you're not trying to go for class credit and you just want to like audit the class, that's usually cheaper. Lots of community colleges have bookkeeping certifications. There's also the AIPB bookkeeping certification. Online, you could do that. That one's pretty thorough. And then if you want to pay for a program that's really good, I would recommend Katie Farrow's Become a Bookkeeper. It's based in the Xero software. And so she has like a practicum and everything that goes through doing everything in Xero, but she actually took an accounting 101 textbook and extracted the really need to know stuff to apply to a bookkeeping business. That pricing for that program is going up at the end of February though. So if you are interested in that, I would get on it pretty soon. And let me grab the link for it. I do have an affiliate link, and I would love if anyone is interested in this program to use my affiliate link. I back this program 100%. I put my team through it. One of my team members had zero bookkeeping background. She went through this program and she's now a bookkeeper for me, and she's amazing. So I do back this program. It's good. Right, dropping it in the chat. That is the link. Oops, I didn't mean to direct message you. Try this again. There we go. That's the link to become a bookkeeper with Katie Farrow. If anyone is wanting to start a bookkeeping business, but maybe like you're unsure if you have the skills, or maybe you need a refresher, or you're brand new to bookkeeping, this is a great program. Okay. Awesome. Well, thank you all so much for joining the Q&A. It is almost the top of the hour, and I have my team meeting next. So thank you again so much for joining me live. If you have questions or want to watch the replay, it will be on my YouTube channel, just at Ambitious Bookkeeper. I super appreciate all the questions you guys submitted. You guys are great. I love it when people come with questions, because then I don't have to ramble. I can just answer questions and not feel awkward. Thank you so much. Yes, replays will be, if you are a student of mine in BBA, we will upload the replay to your portal. If you're not a student, no worries. The replay is on YouTube. You can refer to it anytime.